You are listening to the CMQ Investing Podcast. CMQ investors, welcome to the show. It's great to have you here. My name is Chris Franco, and I'm your host, and today we're going to be talking about how I'm investing my own money. Something that I haven't, if you've listened thus far, you've definitely heard me talk about it, but this is probably the most transparent I've gone as far as getting into the details about my own allocation and some of the individual names that I call long-term holds. This all stemmed from an Instagram live broadcast from last night. We've got about 65,000 followers who follow along to the Charlie Munger Quotes account. That's a different CMQ. But this is the CMQ Investing Podcast, where the CMQ stands for Compound Money Quietly. That's what we're trying to do as long-term investors. I hope you learned something from this episode. I know the feedback that I got last night was that I need to publish this. I'll probably publish some more segments from this live broadcast today and tomorrow, so stay tuned for those. Please make sure you follow on Apple Podcasts and Spotify. If you haven't followed yet, go ahead and do that right now. It just takes a second. That way you will get all the episodes in your feed as soon as they go live. It's a great way to help more people discover CMQ investing. If you enjoy the show, whether it's this show or any of our past shows, please leave a 5-star rating and write a written review on Apple Podcasts. That goes a very long way. But let me get out of the way, and let's get to the money. I shared with our newsletter subscribers, and by the way, that's at cmqinvesting.com. It's free to subscribe. I shared my personal portfolio, meaning how it's allocated between index funds, individual stocks, and cryptocurrency. So I'll tell you a little bit about that, and then that will lead me to tell you about my top 4 holds or long-term holds, and that's a question that I'm being asked right now. But here's how it's split up. 63% goes to low-cost index funds, 36% goes to individual stocks, and 2% goes to cryptocurrency. Now, the low-cost indexing, I'd say that's the core of my investment strategy. It makes sense to me. I run a business. I don't have, I'm not fooling myself to think that I can compete with, guys that are on Wall Street doing this 16 hours a day, 6 days a week. I prefer Vanguard's VOO, which is the S&P 500 index ETF, as well as the VTI. They both have very low expense ratios, and they allow me to gain from what Warren Buffett would call America's tailwind. And just to give you a quick quote from Buffett on that, he said, "Over the next 77 years, the major source of our gains will almost certainly be provided by the American tailwind. We are lucky, gloriously lucky, to have that force at our back." Now, individual stocks, I'll save that for last because I know the question here is about what are my top 4 long-term holds. Cryptocurrency. I wrote here, it's all speculative. I don't think that everyone should be doing this. I am very conservative in how I do it, but I currently own Ethereum and Solana. I sold my Bitcoin when it hit the 50,000 mark back, maybe in May, and I've not looked back. And I could discuss that and discuss the thought process in an episode in the future. But let's get to my individual stocks. And this is not investment advice, just to be clear. This is just what I'm doing. You should do your own research. Don't just follow me. So the 6 individual stocks that I currently own account for 80% of the total value of my individual stock, call it portfolio. Now, it's not just one portfolio with individual stocks. I have, one's like some retirement stuff. One is just my brokerage account. But again, individual stocks are 36% of the total, and 6 of those account for 80% of that. So what are they? The first one, and this is the big one, is Apple. I first purchased shares of Apple in June of 2015. I'd be lying to you if I said I was, had some just second level insight. My thought process was literally this. I love Apple products. I see Apple products all around me. I heard Warren Buffett once say that you should only buy stocks that you're willing to hold for 10 or more years. And Apple, to me, I just felt comfortable holding that for 10 or more years. That was it. It was not that sophisticated. I could argue that I was, the success of Apple has been, not because of anything that I saw that was spectacular. I was lucky to pick the stock, but whatever, that's what happened. And it started in June of 2015. Now, I've since learned a lot about this business, and I've added to that position. And I see someone saying, sell Apple, it's almost $3 trillion. I have a really good reply to that, so stay tuned for this. But no, so I still own Apple. I have stopped adding to it. I stopped adding to it in the summer of 2020, I think. And I really believe in the long term of the company. That I'm still bullish on Apple personally, but it should go without being said that I didn't buy it because Buffett bought it. I'm proud to say that I owned it before Berkshire started buying, but I'm not trying to sound that smart because when I did buy it in 2015, it was like you just heard me say, not for the most sophisticated reasons. Now, the second biggest holding in my individual stock portfolio, I believe here, is close between, it's Berkshire Hathaway. So I first purchased shares in July of 2020. I plan to hold for a very long time. I don't see any reason to sell. It's one of these companies that just, guys, I run Charlie Munger quotes on Instagram. It almost be, of course I'm biased, but I also am proud to have some sort of like actual ability to put my money where my mouth is. I believe in Buffett and Munger. I believe in their plans for, how Berkshire will be run when they're not around. I hate to say that, but that they talk about it more than I have ever talked about that. And I think Berkshire Hathaway is it's a contender against the S&P 500. It's part of that index, but I think that, Berkshire has, just take a look at their 10K. I don't want to get into this and turn this into like here's Berkshire Hathaway 101. That should be its own episode, but I'd encourage everyone to crack open that 10K and take a look at what they're really doing, because it's a lot more than just shares of Apple and like other things that I think people equate Buffett and Munger with. The next one, this is a little bit more controversial. The number 3 largest holding in my individual stock portfolio. Get ready. What do you guys think it is? Rhymes with Alibaba. It's Alibaba. I first purchased shares in July of 2018. Those have not done great, but I added to that position in an account that I feel, again, it's intelligent the way I've allocated towards it. If it all goes to zero, I'm not dead, and that's always something I consider. But Alibaba to me is a company that is being grossly undervalued, or the price rather is just being depressed by factors that I do not think are indicative of how the long-term future of that business looks. Forget commerce for a second, and I could talk about commerce all day. But their cloud business, for example, is the 3rd largest in the world. Mind you, they are trailing significantly behind the top 2, but they are also gaining in market share. And by all accounts, they have a very strong business there. I also think from the sheer scale of Alibaba and what they're able to do in terms of the brand they've built, the ability for them to branch out beyond China and even just China itself, and how still so much room, how I believe anyway, there is still so much room for growth in China. There are many more things I could add to this. I'm not trying to turn this into a justification for why I own what I own. And as I said, none of this is meant to say you should own these two. Do your research. Don't just follow me. But like I said, the whole point of this was to be transparent about what I'm holding. And that leads me to my number 4 largest position, Microsoft. I first purchased shares in February of 2020. The price had taken, I believe the price was getting clobbered a bit, but I'm up 90% since. Again, I'm a long-term investor, so I'm not looking at that as, some indicator that I'm, the next Warren Buffett. To go 90% since then is great, but I recognize this has been a unique time in the market. But that's also one of the reasons that I started buying more individual stocks, because I wanted to participate in that. Long term, I'm all about the indexing, but those picks that I've mentioned, like Apple, especially Microsoft, they've done great in relative to the index. So they've helped me get alpha in my portfolio. I think in the last 3 years, if I look at the rolling 3 years, I'm beating the index by maybe like 3 percentage points. Which, if you consider that I made some stupid moves, but even back in that year 1, I'm pleased with that, because I think if I can get 1 percentage point better than the index or better than the market average, that would be success for me. So on that note, let's move to number 5. This is actually the only stock, or one of the only stocks, that I've bought fresh in 2021. Any guesses? Intuit. I bought shares in March of this year. Intuit is the company that owns, they own QuickBooks. They bought recently, was it TurboTax? Credit Karma. They recently bought MailChimp. They have Mint, the personal finance management app, service, software, whatever you want to call it. I won't get into all my reasons why I bought, but I bought for some very, I think, second level thinking reasons. I have a whole episode about second level thinking, by the way, that you should check out. because it's one of the only reasons I would ever buy an individual stock is if I have some sort of second level insight. Intuit has done great since then. I think I'm up like 70%. Again, I'm long term, so that doesn't mean I'm celebrating, but it's still better than being down 70%. All right, my last pick here. This is number 6, and that company is Costco. So I first purchased shares of Costco in August of 2020. I think again, I'm a Munger fan, but I understand the business. I've done the homework, and I feel in terms of my allocation there, I feel strong about it. It's also a company that I respect and I like what they do and what they represent. And I like owning great businesses that I think have future growth opportunities that I also think, are adding more good than bad. And Costco fits that box, certainly. So some of those stocks I mentioned are also a meaningful part of the aforementioned index funds that I mentioned. So I want to bring something up. And the reason I say that is because it's a reminder that we can actually have more exposure to an individual stock than we realize. And I'll give you a perfect example. If I just break things out, I believe Apple represents 12% of my total portfolio. Like if you factor everything in, just Apple alone is 12%. But if I look at the index exposure, it really, and technically speaking, it turns into about 16%. But if you're not thinking in those terms, you could be just unknowingly overinvested in one name. Because I don't think it's normal to think like that. Like to say, okay, what percentage of the index is, let's say, Apple? Okay, what would my index exposure equal in terms of, my percentage to that one name? And so when I did that math for myself, as I mentioned, the allocation to Apple went from 12% to 16%. So look, I hope that's helpful. I hope that's interesting. I will continue to share updates like this. And I see there's a lot of questions which I will answer to my best ability here once I finish on this. But I will also upload this as part of the podcast. You can hear this. Again, the podcast is CMQ Investing Presents Compound Money Quietly. Just search CMQ Investing. Make sure you follow on Apple, follow on Spotify. If you want to support what I'm doing here and what I'm doing with the podcast, and you're on Apple Podcasts, would appreciate it if you'd rate it 5 stars and leave a short or take the time to leave a written review. It doesn't take long to do. If you have some genuine thoughts you want to share that, so someone else can see it and say, oh, I'll give this a chance too. Again, Apple Podcasts would love you to leave a written review. It goes a long way. I'd appreciate it. And you will be my friend for life.